Alright, everybody. In just a little bit over 10 minutes, we're going to get the biggest news of the year so far, which is the Non-Farm Payroll release. The forecast is anywhere between 0K to negative 3K, as from the source that I picked it up, is negative 3K. So we're very close to that zero or unchanged level in the non-farm payroll reading. And as I said before, if we do get a positive release, it could be somewhat of a psychological boost for the US dollar. So if we do get that, and what I have done is on today's trigger, we usually trade about 70K of deviation for the non-farm payroll, but today what we're going to be looking for is negative 73K, and to sell we will do a negative 73K, and to buy, I think on a 50K trigger should be good enough. And if we were to sell US dollar, I'm looking to buy the pound dollar pair, because looking at the meter, pound is showing at 750, and I think we do have plenty of potential to go upwards. So on a worse than expected number, I'm looking to buy the sterling, and on a better than expected number, we could be looking at the CAD, which we just had a bad number from the CAD, so the CAD could see like 104.50 or something. The euro is at the resistance support area, and I think the immediate support is maybe around 142.50. So if we break below that, we could see 142.00 and maybe even go below that. So that's another trade we could be looking at if we do get a better than expected number. And I think we will definitely spike downwards with that if we get positive 50K. And what we're going to do is we'll have to wait for the market to settle down first before we jump in. So it's definitely a retracement trade. I don't feel comfortable jumping on a spike trade for non-farm payroll. It's never good. Always there's a possibility for a strong pullback. So I would definitely wait for a pullback before I jump in. And of course we need to see that the numbers are there. Looking at the market, we are primarily going to be looking at the euro dollar and the pound dollar. So we're looking both at the 30-minute chart right now, just to give us a clear view how the market has reacted. Okay, less than a minute now, guys, so stand by. Don't get too excited. There's no reason to jump in, or we'll wait for a retracement, absolutely. So stand by.
For a change in non-farm payrolls and unemployment rate in the U.S. should be out in just a few seconds.
Take a deep breath. We're not going to do anything in the next 3 seconds or 10 seconds. Just calm down.
Minus 85,000, 10.0%.
Okay, 85,000. We're going to be looking to buy the pound dollar.
Plus 4,000 for minus 11,000.
We're going to looking to buy the pound dollar. Pound dollar is at 160.44.
5,000 expectation prior rise higher to minus 35,000 for minus 41.
So we're going to wait for a pullback.
It's in line with expectations prior revised 1/10 higher to 0.2% year over year.
The unemployment rate stay at 10%. So it is a worse than expected. So we're going to wait for a pullback. We saw 40 pips of jump on the pound dollar immediately. So we're going to be buying the pound dollar. Just wait. We got to wait for perhaps a little bit better retracement. We're seeing immediately a spike up. So let's see if we can get some kind of a retracement. Now we're looking at somewhere around the 43, 47 area. Is that what you guys are seeing on your screen? We have 34, 39 on my screen. So let's wait for some kind of a retracement here. All right, let's get in around the around this area. I'm getting some invalid prices here. I've got in around the 39 area. 39 area. Okay, we're seeing some strong. The pound is showing about 5.5. Dollar is showing about 160. We got in around the 39 area. I think the upside potential for this trade, if we break above the high here, we're looking to see if the market breaks the 160, 50, 60 area. If it breaks above, which I think there's a strong possibility, we could see it move to the next area, which will be just around the 160, 150. So there's a good 115 pips of movement upwards. Okay, so what we're going to do is we're going to put a 35 pip stop loss. Hopefully we will be able to pick up 80 pips from this trade. Alright guys, there's a lot of volatility going on in the market, so just don't get shaken out. We are going to use a mental stop here. There's a lot of traders obviously changing their long-term positions, so we're seeing the market reversing a little bit. So that's why we're seeing a lot of volatility going on here. I do think that we could see at least a retest of the sterling going upwards. It's definitely a possibility. We'll see a retest of that. We will probably also see a push upwards. Hopefully we'll see 161, break above the 161, given the fact that we're seeing a lot of support now going with the sterling. And I put my stop loss at the 160. I think that's going to be a pretty good level, considering it is also a psychological level. Okay, take your profit 50%, guys. Take your profit 50%. We're seeing 0.48, close 50%. All right. All right, move your stop loss to break even. Move stop loss to break even. Now let's see if we can see 160, 110. So we already have stop loss with break even. We're at a position where we're not going to lose anymore. So this is a great feeling. And if you feel that 30 pips is your daily goal, and you see the 30 pips, we have as much as 34, 35 pips. If you enter where I enter, then then you could just call it a day and just walk away. But I think we just broke above the 60-60. There's some stop loss getting hit when you see this kind of reaction, and also we are exiting the trades. We took our profit. I think a lot of people taking their profit too. So that initial pullback, I think, is stop loss getting hit. And now it's just we're going to continue upwards. So I think 161 is a possibility. I think 161.50 might be the limit here. So if you want to hold to 161.50, you might be pushing the limit, pushing the envelope. But, depending on what you want to do. I'm going to go ahead and close this trade. We're looking at 57 pips of profit. So I'm going to go ahead and close this one. So close. So I'm going to go ahead and take it. And if you guys want to take it, it's fine. I'm going to send an SMS saying that I'm out. And if you guys want to wait for 161.10, 161.50, it's up to you. I think it will happen, but just have to be a little bit patient. Look at that. Look at that. Just a few seconds. It never fails. Every time I get out, immediately after I get out, the market goes in the direction I want it to go. It never fails. So I guess the ones that get the SMS now, they have an advantage because now they can get out at a much better exit. But I'm out, and I'm done for the week. So see you all later. Have a great weekend. Bye-bye.